Hello, this is Huskins, your Forex mentor. This is me in the middle with this big medal which reads the best dad ever. Well, children, y'all are the best children ever. Thank you and thank God for giving me the opportunity of being your dad. Thank you so much. And I'd like to share with you a little story about my daughter. She graduated and she sang a song. Um, there's a little light in me and I'm going to spread it around the world. And then she's 5. So I asked her, Insia, what do you mean by a little light in you? She said, a little light does not mean like a light bulb. It means that living your life to its fullest. It means having a smile in your heart. And I'm going to spread it around the world and I'm not going to let anyone blow it off. Wow, those were heavy words from a 5 year old. I thought I was going to teach her something, but there she was. She taught me how to live life. And uh, I constantly keep on learning from my children. I constantly keep on learning from you. Thank you for enriching my life and making it better than what it used to be yesterday. Thank you. Let's talk about our results. Our June results still hold an 88%. Let me show you how we compute these. As you can see, each and every trade which we take, since the last time I spoke to you, we had 4 trades, and here we go. We had one, you know, we had two winning trades, one losing trade, and one break even. And all of these trades are right on top on the website. You could look at the videos. The videos are for premium subscribers only, and once you log in, you'll be able to get access to that. It is a very important point or part of our coaching wherein we show you how to manage the trade and how to trade the trade plans. So if you're new, uh, it is very essential that we just don't take the trade plans and run with it directly. Watch these videos. It'll take you maybe 15-20 minutes, and watching my video another 15-20 minutes. So at least dedicate half an hour to 45 minutes of your day on watching these videos so that you can inculcate them in your trading psychology. So these videos, I'm very grateful to Rick. A shout out to Rick. Thank you, Rick, for doing such an awesome job. And thank you from all the traders and from myself. All right, so I wanted to share what happens when a central bank step back on easy money. Well, the equity, debt, and currency markets worldwide have been shaken as investments and policy makers try to determine whether the global economy is on the verge of normal growth or another downturn. The yield on the 10-year US Treasury, a widely followed benchmark for anxiety in the financial market, reached the highest level in more than a year. That was on Tuesday. While stocks and commodity prices remain volatile in many countries, one of the concerns is what's going to happen if there is a sudden stop to the loose money or loose monetary policy. So, and if you've been following me, you already know what I believe is going to happen. I believe that the market's going to continue to go up. It's going to get suckers in and it's going to tank. That's what I believe is going to happen because the recovery has not been made on loose money, on real. Job growth and a real economy. It has been based on a lot of loose money. So when the loose money is going to go away, do not expect the market to tank immediately. It, it takes some time. There is a little bit of lag effect. So It's a musical chair game, and normally the smart investors, are not the ones holding, or without a chair when the music stops. So you need to be careful of that. But right now, I expect the markets, after its little jittery movements, to rise higher than it had already done, and then when everybody thinks everything's normal, it could come crashing down. And that's just what my opinion is. All right, so we looked at the US bond market, but let's look at the world market. When the US 10-year Treasury yields hit a 14-month high of 2.25% on Tuesday, anxious bond investors sent yields higher for some shakier Eurozone debt. For example, the yield on Greece's benchmark 10-year bond hit its highest level since the beginning of May. The yield on German bonds also rose slightly. Now, let's talk about. I like to get your attention on the German court ruling on the ECB buying program. Basically, it says that the the outcome of its rulings not going to be dependent on the program's potential success or failure. So how good the program is irrespective. If you do not know what the ECB bond program is, here is a quick summary. The Eurozone central bank basically thinks that there are certain countries in Europe which are uh, paying a very high interest rate on their bonds. And that is unfair, and that is causing them, those countries, not to be able to borrow at prices which they deserve, but pay a very high interest. And that particular, it's a vicious cycle. So, since they cannot borrow well, they're not going to be able to get out of the misery which they are in right now. So what the bond borrowing program, which will start from September, does is that it will buy the bonds of some of these lesser attractive countries, such as Greece, and uh, by doing that, it will send the bond prices up, and because the bond prices go up, the yields come down. So in short, what it means is that the interest rates on Greek bonds will be a lot lower than what they are right now. But the problem is that if somebody is buying these bonds, what happens if Greece in fact goes bankrupt, or the bonds which these people are holding on to? Yes, the governments are holding on to them, but the government is nothing but a representation of the people. So the people are at hook, and who's going to be on the hook in the eurozone? The Germans. So the Germans have filed a petition against their own government, telling in the Supreme Court, basically saying that uh, you know we don't want anything to do with this program, and it is unconstitutional to get us on the hook at by this bond buying program. So now, irrespective of how sound this program is, the court's going to make a ruling whether this particular thing is constitutional or it's not constitutional, right? And this is going to be very important, because if the Supreme Court rules that it is unconstitutional, there goes the euro. The euro is going to fall down like a hot potato. So you have to keep in mind these macroeconomic court rulings and cases while you're trading your currencies. So now let's come back to the USA, and let's talk a little bit about the retail sales. The retail sales in the US rose more than forecast in May, showing job gains and lower borrowing costs are encouraging consumers to spend. The 0.6% increase was the biggest in 3 months, followed a 0.1% gain in April. So that's some good news from USA. Now let's talk a little bit about the UK labor market statistics of June, 2013. All right, so the employment rate for those aged 16 to 64 was 71.5%. Now this was down 0.1 percentage points from November 2012 to January 2013, but up 0.7 percentage points from a year earlier. So it's down from the quarter and up from a year earlier. There were 29.76 million people in employment aged 16 and over, up 24,000 from November 2012 to January 2013, and up 432,000 from a year earlier. The unemployment rate was 7.8% of the economically active population, unchanged from November 2012 to January 2013, but down 0.4% from a year earlier. There were 2.51 million unemployed people, down 5,000 from November 2012 to January 2013, and down 88,000 from a year earlier. So, um, the what does this say, that the UK labor market's going in the right direction when we look at it from year to year, but it is not having the same kind of growth acceleration which we'd like to see, you know, compared to a quarter. So last quarter was better than this quarter, in short. So let's look at the Reserve Bank of New Zealand's policy statement. Basically, the Reserve Bank left the official rate at 2.5%. The global outlook remains mixed, with disappointing data in Europe and some other countries, and more positive indicators in United States and Japan. The global financial sentiment continues to be buoyant, and the medium term outlook for New Zealand's main trading partners remains firm. Now, this was our break even trade. So, let me go through our trades really quick. We had a winner on the retail sales today, about a 20 pip winner. We had a 30 pip winner on the UK labor market statistics, and on our New Zealand trade, it was actually a break even. And now let's look at a losing trade. Well, basically, the May key points trends estimate, that's the monthly changes, employment increased to 11,664,600. The unemployment increased to 687,700. The unemployment rate was at 5.6%. Now the participation rate was steady at 65.3%. Now what does the participation rate mean? It means that the people who are of the correct age and are capable of working, out of that, only 65.3% decided that they want a job. So, so the rest of them decided that they don't want a job. Someone like a person who already has a lot of wealth and doesn't need to work, or maybe a housewife, or a person who is so disappointed in the economy that they've just given up hope of finding a work. So that is why it is very important to look at the participation rate, because sometimes, let's say, if the participation rate falls and the unemployment rate also falls, the unemployment rate which has fallen is not good news. Sometimes you just look at the unemployment rate and you can say, okay, it fell from, I'm giving you a hypothetical number. Let's say it fell from 6.5% to 6.2%. So that means that more people are working, and that means good news for the economy. But no, because the participation rate also falls. You want the participation rate to rise and the unemployment rate to fall for it to be good news for the economy. So just a little note to uh, if you are trying to understand and see why why certain headline numbers give away, and sometimes the headline numbers make consistent movements. This is why, because we need to go under the skin a little bit, dig deeper, and see what's actually happening with the economy. So that's about it for previews. Let's look. Sorry, for reviews. Let's look at what we have in store for us. We go into the premium section, and we come down out here to the University of Michigan's consumer sentiment. Now, this is a contraindicator. What do I mean by a contraindicator is that consumers are the last people to know of what's happening in the economy. Normally, when the economy is tanking, there's a U-turn already in the economy, the sentiment the consumers have is really bad. But if you're right on top and the economy is going to tank, the consumers feel that everything is awesome, and everything's hunky dory. So I use this as a contraindicator. There is no day trading plan on this, but I use information from this for my longer term goals. And what are my longer term goals? Like the ones which I talk about on my gold and on my on the Dow. So that's about it, guys, for right now. Till I talk to you next, have a wonderful day. Bye for now.